even as we talk about a Chrysler bankruptcy that at this point seems imminent, could happen within the next couple of hours. Investors encouraged in part because of some better than expected economic data, and we seem to be hearing a little bit more of that as of late. So who said April's the cruelest month? We've got the S&P now experiencing its best monthly gain since December 1991. That's how far you have to go back. While the Dow is having its best monthly advance since October 2002, which brings us to the question. I'm going to throw this out there. Will the Dow hit 10,000 by the end of the summer? And if so, how exactly do you want to be taking advantage of it? We have a bull and a bear on hand to discuss. In the bull camp, Paul Schatz, president of Heritage Capital. And for the bears, John Brown, senior market strategist with Euro-Pacific Capital. Okay, Mr. Schatz, I'm going to kick it off with you because you're saying that it's not inconceivable that we could actually see that. Tell me why.
It's not. First of all, let's remember it was just 6 weeks ago where the market was pricing in economic and financial Armageddon. Clearly that didn't happen. So you've got roughly at a 60% off sale for this scenario that's not unfolding. That's number one. So the rubber band got stretched as far as it can get stretched. You get the initial surge in March. Number two, this is a complete liquidity-driven market. You've got an enormous amount of cash from the government alone. Forget about cash in the sidelines, but think about what the government, the Fed, the Treasury are doing. You never want to fight that trend to begin with, no matter where the economy is going in 2010.
Okay, so that all bodes well. Paul, let's get over to your colleague there, or rather the other side of this equation, Mr. Brown. I know you've been bearish for quite some time, and tell me why you think it is likely we're not going to continue seeing upside.
Well, I didn't say we're not going to continue. I think the market's in la-la land at the moment, and la-la land may well continue up to 10,000. I wouldn't agree with that. Tremendous liquidity driven. But then John Wayne will kiss his leading co-star, and the lights will go on, and then we'll face reality. And the short-term reality, with the economy shrinking, corporate earnings decreasing.
Well, a lot of people are saying that the economy is not going to continue to shrink, though, come third quarter.
Well, it is at the moment. I mean, that's la-la land hoping. At the moment, it's shrinking fast.
La-la-land's all well and good.
Larry, are you in la-la-land?
Creeping socialism. We've got creeping socialism.
John,
coming.
you are right about the tax and regulatory burdens and the interference with the economy coming from Washington. I couldn't agree more, but that's a longer run and slower issue. Paul, let me review your point. You're just saying, and I think I agree with this, the Fed stimulus has been unbelievable. It's been about 6 or 7 months. So we're getting now into the point where that affects the economy. And I want to go back to this James Hamilton.
Making it worse.
That's the, I'm going, directing, I want to go to Paul. Paul, Jim Hamilton, very distinguished economist, University of California, San Diego, has been blogging, and I picked this up from Carpe Diem, Mark Perry of University of Michigan. If the unemployment claims keep falling, Paul, and they started falling, they fell again today, the 4-week average peaked in early April, we could be looking at recovery in June. It's that close up, and that is something that is off the charts bullish, and I think that could carry it to 10,000. Now, are you playing that recovery bet? Is that what you're doing in the next 30, 60, 90 days? The recovery trade?
Yeah. Larry, I don't know when the economy is going to recover, and frankly, you know, to partially agree with John, I don't think we're going back to trend growth. I think we're pricing in no more financial Armageddon. So can we recover a little bit? Can the economy get back to 1 or 2% growth temporarily? Yes. Right. That's what the rally is all about. We're 30% based on that.
You see, John, you're going to be right in the long run, okay? I don't want to disagree with you because I don't like what's going on in Washington, as you well know. But, John, the difference is here. In other words, from -6% recession to +2% recovery is a hugely positive thing. Second difference is the change in the change is enough to get us back. It may not get us to 14,000, but, John Brown, it can get us back to 10,000 as per Trish's original question.
Yes, I agree. It could. This bull market could run into August, and it could go to 10, as I thought, as I said. But it's going to be a very expensive stock, and those people that stay in are going to be really burned very viciously as the market, when it realizes reality.
Well, maybe
John, you say that we've seen this before. Hang on, Larry. John, we've seen this before. Hang on, guys. We got everybody talking at once here. John, we have seen this before. Is history repeating itself? Take me back to the 1930s.
Yeah, exactly what happened is a very good point. 1929, we lost 49%. 2008, we lost 50%. Then the government, cheerleaders and politicians, corporate executives talked the markets up. There was some money put in, late, admittedly. and the market went up, and then it lost. The final toll was minus 90%. And I think it's probably going to be worse this time because there's just so much more liquidity, funny money, the abuse of paper money has been just extraordinary, and creeping socialism is destroying. Creeping socialism is destroying free enterprise.
I'm on my knees trying to stop that, but the fact is, Paul, you got to play this a day at a time, don't you? A week at a time. And right now,
day at a time, I agree. Day at a time, ride the ball.
John, just hush up for a minute. I'm trying to get Paul to answer here. Paul, you're switching here, possibly, from a very deep recession to some kind of recovery. That is the basis of your trade, is it not?
Absolutely. And the previous point about the 30s, I don't think it's a bad analogy, except I think we're in 1937, 38, where FDR threw all that stimulus, lower taxes, essentially free money, and then the government made the big mistake of trying to balance the budget, raise taxes, pull some of that stimulus out. That was why we had that big recession 38, 39.
So we can cross those bridges when we get to it. All I'm saying is look at what's in front of us, Margaret and Trish. Right now, the data are changing from deep recession to positive, hopeful recovery.
That's I mean, that's assuming, though, Larry, we don't
even the
unemployment is picking up, for God's sake. That's what's driving us from 6,500 towards 10,000.
What is out there?
Even the unemployment is understated. The real rate, if you calculate on a pre-clinical basis, is 19.2%. 0.8% short of depression.
John Brown, thank you so much. Paul Schatz, appreciate it as always.
Thanks, Trish. Well, when we come back
I'll deal with all those bad things when I get to them, for God's sakes. Day at a time.
Well, what's going to lie ahead for the Chrysler brand, Larry? That's the big question of the day.